Hello, welcome to another S7FX. First, I will be doing the forecasting and discuss about all the trading opportunity which were present today. Then I will be doing the backtesting of June 2022. Let's start with AU Euro USD. So in Euro USD, we had some interesting scenarios in the morning. We'll be discussing this sort of price action. At mark our high and low. So here the market break the low. You can see that the market break the low, but the break was not very convincing. It break the low. It had some wicks, okay, and then retrace. And also it was the late Friday night. So at this time we usually don't take any trade. Then the market continued its move. Market opened, and once the market opened, we get a nice move to the downside. So if we look at the overall market condition, so we had some sort of range bound market condition to the left, okay, and we usually wait for at least 4 hours before taking any entries. So first candle had some wicks. When I saw this wick, the previous market structure was also not very trending to the downside. Break the low, retrace, again break the low, giving us a wick. Next candle, when I saw the next candle, it just barely break the low. Just don't look at the impulse. Okay. If you look at the size of the candle and how it break the low, you will see that the previous candle was almost of around 37 pips. Okay. And if you look at this candle, it was only 22 pips. So we can see that just by looking at the candle and look how it break the low. It just barely broke the low. After looking at these two candles, I was like, okay, unless we get a nice continuation candle, we would not take any trade because that would be a loss. Because we can clearly see that the market has started losing its momentum to the downside. It's not showing me that it wanted to continue its move to the downside. And after this candle, okay, I saw a complete flip. Like, usually when we see this sort of impulse, so our expectation is that the market should continue its move to the downside. But when after this candle, I saw that the market has rejected. Okay, some wicks and then rejection. Then I waited for next candle. Next candle was bearish candle, but again, not a very bearish candle. It is some sort of like indecision candle. And when I got this candle, so after this candle, many people wanted to place an entry somewhere around this area. Okay. But if you guess the momentum, if you guess the momentum correctly, so what the market is doing? Broke the low. You can see after this sort of impulse, it retraces completely. Okay. It retraces completely after this sort of impulsive candle, which is like not a big impulsive candle, but it is like a small, like minute wick at the bottom, and then it just flipped. Then it just broke this low. It broke the low and gave some sort of uh, wick at the bottom. Previous market condition, I told you that I was not seeing any sort of nice continuation of the trend, because it just break the low, barely break the low, and just retrace all the way back up. Then it again break the low, giving us some wick. Okay. So at first here I wanted to place my entry. Okay, and I also placed the entry. Okay, but the entry was just the market came at my I placed around like 5 or 10 minutes late. Okay, and market went at my entry level and then just suddenly fell down. So when it came down, so after that I see this candle. So after this candle, I was like, okay, there is a high chance, very, very high chance. See, till this candle, I was like, okay, there is a chance that, let's suppose if the candle would have tagged me in, there is a chance that I could easily get around 1 or 2. I had not a lot of expectation with this trade, but expectation was 1 or 2%. Okay, 1 or 2% max with this trade, because I could see that market is not showing the momentum to the downside. It barely break the low, and look at the retracement candle. And if I count the pips, like this white candle has almost 16 pips, and if I see that this black candle, it is almost like 17 pips. Just think about it. The retracement is 15 pips. Okay, and the continuation is only 17.5 pips, and we are saying this as an impulse, seeing it as an impulse. Okay, so this is not an impulse. This is just like a normal candle, which is because market has like the market open at around this area, trying to continue its move to the downside, but it is struggling to continue its move to the downside. You can see that it has some wick at the bottom. Okay, the height of the candle is not that good, only like 17 pips. The previous retracement was almost 16 pips, and then the continuation was almost 17.5 pips. So I was like, look, we are not in a good situation to take a sell. Okay, so after this, I just removed my order. I did not want that a candle just come in and tag me in. So you can see that after two on third candle, if I would my order would be at around this area, it would have tagged me in and tagged me out. So I just removed my order from at this level, and you can see my MT5. You can see I have not taken any trade today. Okay, let me just full history. You can see I have taken only 2 trades, which were on uh, 30th, 29th, and 30th of March. So I have taken only 2 trades. Okay, so in AUD USD, Euro USD, I tried to take this entry, but then I just realized if you look at this candle from just like how small the chart, you can see just then look at this candle now. Is it looking very impulsive to the downside? No, just break the low some wicks. So there was like chance that it can give you a deeper retracement, those sort of things. So I did not take this entry, and then the market just shoot to the upside. After this candle, I wanted to take the entry, but after this week, I just like, okay, there is no place to take any entry at this sort of market condition where we have a V short of recovery. Okay, we had some wick at the top, so there is a high chance the market can go inside the range. I just removed the entry. I did not place the entry, so because after this week, I just wanted to wait for some time. Let's move to after these sort of weeks, there is a high chance that it can make the market go inside the range. There is no entry, just wait patiently. Percent to make 2% a month with his strategy. I think we need 8% to make to pass prof on. Here we can see that when the market closed on Friday, 2% a week. Believe me, if you will try to make 2% a week with his strategy, it will also become difficult. You will not be able to do it smoothly. In the beginning, you will get some like you will get some success, but later on you will realize that it is a difficult thing to do. I have done all these things. I'm telling you by the experience. So in the beginning, you will get you will definitely 100% you will get some success. But after some time, you will just start getting some. Revenge. Yes, I know him. If don't lie, I have bought his course also. So here it breaks the high, retraces. Okay, and it broke the low, give us a large wick at the bottom. So I did not want to take any bomb after this candle. Okay, because we had a big wick at the bottom, we had a big wick at the top, so there is a high chance we could go inside the range. Then it broke the low again. So once it broke the low, so usually I wait for at least 4 hours before taking any entry. It broke the low. Okay. Previous market condition was completely inside the range. This was just a single impulse. Next candle, it already given us a large wick after this was the 4th hour. Okay, so at the 4th hour, I usually try to take the entry, but after this week, I did not want to take any entry. I just mark my alerts at high and low. Wanted to wait to see what the market does. The next candle was some sort of a V short recovery. So I did not want to take any after this sort of price action. Waited patiently. Then the market continued its move to the upside. We had our inside bar at around this area. So our entry was at around this area. But the market could not reach to this level. Then just shoot up. So here I wanted to take, after this candle, I wanted to take a bomb entry. But it did not give us any opportunity to be in the market. And let's see if we get any bomb. We would like to take the entry, but the thing is that the entry must be a perfect one, because right now what I am seeing, I am seeing some sort of wick at the top, and also these two candles are not good. Okay, these two candles are not good candles. When you see this sort of candle and you get a single, like a small bomb, usually you will get some sort of retracement, because these candles are showing the exhaustion in the market. See, wick is, if you will look closely to the price action, then you will realize that wick is the secondary confirmation. Okay, prior to that wick, you will definitely get some sort of weakness in the market, and that confirms that if you will take any trade after the wick, there is a high chance that you will end up in a loss. Don't try to take the trades, gauge the momentum of the market, then try to take the entry. Yes, it is possible. that some months you may get a 20%, more than 20% off. It is possible. So AUD USD is about to break the high. Let's suppose if we get a nice impulse, I would like to take it as a continuation bullet, because we had a nice continuation of that move, and then we get a small retracement, and if we get a nice continuation again, then we would take it as a continuation of the trend. Let's move to next candle. Oh, sorry, next chart. Euro JPY. EJ, we had some sort of range. Let's do a quick thing so that you can understand the market little better. See, if you gauge the momentum of this chart or this trend from here to here to here, we get this impulse. But before this impulse, we saw these two candles, which is telling me that there is some weakness in the market. Okay. And if I get a small wick at the bottom of this black candle, so there's a chance that we can retrace, because the market is showing some weakness earlier, and then we are getting some wicks at the bottom. There is a chance that we can get a retracement. So market just gapped up and then filled the gap, and on the 4th hour it break the low, but once it break the low, it was just a wiki break. So I did not wanted to take any entry after this sort of wiki break. But I managed my high and low. We had a large wick at the bottom, and we do not have a very large impulse to the downside so that we could take a bomb flash bullet entry or a bomb entry. Okay, it was just to break the low, formed a large wick at the bottom. There was no bomb setup, so I waited patiently. It went up, broke the high. So once it broke the high, we had our entry somewhere around this area. So usually if our entry is too far from the present price, I just place a alert like 5 pip above the entry, so that I could see, so that I can see that how the price is, so that I could see that how the price reaching to my level. So after like these 2-3 candles, till this candle I wanted to take the bomb, but after these 3 candles I was like, okay, now there is a very low chance that if I get a bomb, will continue its move to the upside, because you can see that the market is losing its momentum. So when you see that these 3 candles are showing you that the market is losing its momentum, and then you get your bomb, try to not take that bomb, because there is a high chance that it will give you a deeper retracement or it will take your stop loss. You can see that how aggressively it came down. Okay. So there is a chance that before this downward move, you get a white candle like this, and you will think that okay, this is a bomb, this is a good bomb. Let's take the bomb. Okay, because we had a nice impulsive move to the upside, so let's take the bomb at this area. But that would be a bad entry. Why? Because if you look at the top, last three candle of the top, these three candles, you can easily tell that the market has started losing its momentum to the upside. Okay, and if you look closely, you'll see that the market is in some sort of range. Okay, it's going up, coming down, going up, forming some sort of V structure. So usually when you get this sort of V structure, so we get some bigger range. Okay, so you have to keep an eye on everything, not just on the candles or not just on the entry or setup. You have to keep an eye on where I am in the chart, like whether I am in a range bound market condition or in a trending market condition, or my entries has formed just above like many times I see that we have a range, we break out just like this, we retest this area, and then we get a continuation below. So many times I get this sort of entry. Okay. So here in this sort of condition, I become little aggressive to take entry at around this area, because I know that it has already break the resistance, break the range, break the resistance, done the retest. There is a high chance it can continue its move to the upside. Okay. So you can understand or you can know these things just by looking at the whole scenario, the where you are in the price action, where you are in the chart. So here you can see that the market has uh, given us some rejection from this area, but I don't want to take any bomb stress bullet entry because it has already formed a bomb entry. After this sort of move to the downside, I don't have guts to take this bomb entry. Let's just wait for the market to break in. If you are taking a challenge, then you should understand that like if you will not show patience, then it will become difficult to pass your challenge. Because in these sort of market conditions, there is a very high chance that you will get a lots of losses. Every time you will take the trade, you will take loss in this sort of price action. I have been to that phase where I usually caught in this sort of market condition, and I have taken like 4, 6, 7 sudden losses. Okay. So now when I do a back testing, I take like 3, 4 losses. But those 3, 4 losses will be on a 3, 4 weeks in between 3, 4 weeks, not in just 1 week, or not in just in this sort of price action. I just taken one trade at around this area, second trade at around this area, third trade at around this area, and all trades were in a loss. No. Now I have reached at a level where I may get 6 losses in a row. May get there is a chance that I may get 6 losses in a row. But that 6 losses will usually not from one pair, and it will be at a time of around like 4, 5 weeks, not in a just a 1 week or just 2, 3 days. It is difficult. But when I started trading, like 10th, like on 7th of March, I did some back testing there. You have, and this thing shows me that it doesn't matter how much practice you have done earlier. If you are coming to if you come back to a strategy which you have left, then you must have to done back testing of that strategy first. So here we can see in New Zealand JPY, the price action is pretty clear. Okay. The market went up, break the high, retrace, went down, break the low, formed large wick, retrace, went up, broke the high, tried to continue its move. After this candle, I wanted to take an entry somewhere around this area. But the thing is that I did not want. See, the prior price action is completely range bound. If you look at this price action left hand side, we had lots of big candles. Just keep a close eye on these candles. Look at these candles. The big candles to the upside, big candles to the downside. So usually after, if your left hand side is not clear, so if you will try to place an entry which is far away from your present price, then there is a high chance it may get into, like it will take your stop loss, or either it will send the price into the range. So usually try to avoid this sort of entries. I do not place any entry at around this area. Sorry. Yep. At around this area, and you can see after this week also, I would, if I would have placed an order somewhere at around this area after this week, I would have definitely removed the order. So no trade in NJ also. Price action is in some sort of range. I'm not seeing any sort of if somebody is thinking that if I get a bomb slash bullet entry, I should take the entry, don't take the entry, because this is not a healthy move to the upside. Okay, we have lots of weakness. If you look at the height of the candle, how it's going up, how it's coming down, it's almost similar. Okay, so don't try to take any entry in NJ also, just wait patiently. To pass the challenge, you just need like two good trades or one good trades also. If I close my entry at around 3%, I just need uh, two good trades. Let's suppose I get a trade of 3%, so I am already 1% up. So it will be 4%, and then my next trade I will not close at 3%. I will try to close at around 4%. So I just need two good trades. And if I look how much time I have left, I have a lot of time right now. So I just need two good trades to pass the challenge. Why would I like take unnecessary trades, take low probability trades? There is no need to take those sort of trades. Just wait patiently for your nice setup, then take the entry. And this is the uh, recipe to pass any challenge. Just wait patiently. Trading is 90% waiting, just 10% click, click, click. 10% is 10% is also more. Like only just like 2%, 98% waiting. 98% of the time you will have to just wait. Don't have to take anything. Just wait. 2% of the time you just have to click. Wait and see, wait and watch. In the beginning, if you are new, there is a chance that you may miss some trades, but that's fine. That's okay. In the beginning, you may miss some trades. And also, if you are new to the GT, try to take as much losses as you can in the backtesting. Now, don't hesitate to take the trade. Believe me, if you will hesitate to take the trade, okay, that I don't want to like take losses in the beginning, then you will see that you will start losing like some of the good trades also. So in the beginning, try to take as much trade as you can. Just take the trades. There is no need to just not taking the trade. Take as much trade as you can in the beginning. But as the time will pass, you will start filtering out your good setup from your bad one. Okay. And there, the time will come where you will just almost filtered out all your poor setups, and then you will be having your best setups only. So here we can see that the market is completely losing its momentum to the upside. Okay, so in these case, let's suppose I get a impulse to the upside. So there is a high, like I don't know why I would take this entry, but if I look at the price action, it's clearly telling me don't go with high, low, break or retrace or impulse. Don't go with all those terms. Just look at the price action with bare eyes and see what the market is telling you. It's completely telling me that there's a high chance that uh, it will give me a deeper retracement or a change of trend at any time. Okay, so many people will think that, oh, let's take the entry at around this area. My question is that is it looking you very healthy to take the trade at around this area? Do you think that the market should keep continuing its direction to the upside? Is it looking very healthy to you? The previous price action, is it looking healthy? For me, I don't I don't think that the market will continue. In this sort of market, in after this sort of impulse, after this sort of market condition, we usually get big black retracement like this. We usually get, but sometimes we get this sort of retracement after 2 3 candles. See, this is a pseudo impulse. Many people who try to take the sudden impulsive entry, they will try to take the buy at around this area, and after this candle, these will like take their stop loss. See what I told you. The previous price action, if the previous price action is not healthy, then there is a no chance that the present price action will continue your like a single impulse. If like 15 20 candles is not able to continue to the upside, then what will a single candle do? The market has formed wick at the top. Also, when the break the low, it also formed of some sort of wick at the bottom. So usually, when you get this sort of wick, get some range. Today I went into my college, so I got because I got a low attendance warning, so I have to make attendance. So I went to the college, attended 5 lecture. It was very tiring. But but anyway, I thought that if I will not, sometimes what happens. See, backtesting. I daily I use I do the same thing. Daily I use do the same sort of backtesting, same sort of price reading, everything. But you know what backtesting does to me? It just kill the urge to take the entry, because I have already spent 2 3 hours on the chart, so that my urge to take a low probability entry, or like in the price in the market situation, like the present market situation where I'm not getting any entry in this sort of market condition. If let's suppose I am not doing the back testing also, then definitely, as I am a human being, definitely I will get a urge to take the entry. I will get a urge to be in the market, whether it's a profit, whether it's a loss, it doesn't matter. I have also a urge to take the participate into the market, into the price. But when you do the 2 hour of back testing, 1.5 hour of back testing daily, so it will kill your urge to take those improper entries, because you have somehow you have already done like spent 2 hours on the chart. Okay, so that's a very good exercise also. I find this thing recently, because like, earlier also I used to do lots of back testing, but I could never relate this thing. But now I can relate these things. It broke the low, retrace. Earlier also it break the high at around this area and retrace. It is just a single impulse. If you look at this impulse closely, you will see that it has a wick at the top. Also, it has equal wick at the bottom. Usually, if you get this sort of candle after this range, try to avoid this. No, try to wait. So try to wait for one more candle before taking the entry. Just give me a Here, the weather in Delhi is very dramatic. In the evening, it was in the afternoon, it was very hot, and then as the evening approached, the mosam, the mosam, the weather changed drastically. I'm also suffering from flu. So now the market has started its move to the upside. So usually when you get these sort of candles just after the range, try to wait for either you get this candle after the break of the range, retest, and then continuation. Then take your entry after this sort of candle. Okay. Or at least wait for one candle which can show you that the market is losing its strength to the downside, then take the entry. Breaks the high, but just barely break the high. And if I look at the size of the candle, like 1, 2, 3, 4 candle, all are just like not a big candle, just small candles. So the market came down, break the low. Don't take any entry in these sort of market condition. Just wait patient. Market is trying to continue its move to the upside. Break the low, retrace, break the high, forming wick. Trying to continue its move, but I'm not very convinced with this sort of small impulse. Just wait. If let's suppose I would have taken this entry somewhere around this area, I think it would be a loss. Yes, think- yep, there is a a definite loss. A definite loss. It would be a definite loss. So how I saved my 1% at around this area? Just by looking at the height of the candle. First thing, the height, and second thing, how the market is approaching to the upside. Is it looking very healthy to you? Just don't focus on a single candle. Always focus on the entire price action. What the price action is telling you. Am I like am I doing slow back testing, or should I increase fast? Should I do increase? Should I increase my pace? Because I try to iterate the things so that I can also like not do these sort of mistake. Because sometimes when you are in the live market, you know there are lots of things happens usually happening around you when you are in the live market. So when you will speak those things again and again, it will start forming some sort of. Uh, so here I can see that we have a nice after this weak market condition to the upside, we get a big impulsive move to the downside. If you look at this candle and compare to the previous all the previous candles, it is bigger than all these candles. So let's try to take an entry somewhere around this area. Our stop loss is also quite at the top, so this is a good entry. Oops. So this was a for me this was a good entry. It broke the high. Retraces. First was quite good, so it was for me a good entry. But because I don't know it was unused or something why it did not work. But okay. We waited patiently for our nice setup. Took the entry. So we get a nice candle to the downside. But the thing which I'm not liking is that how the market went up, slowed down, formed some sort of range, then broke the low and given us a wick. So after this sort of range, if I get a wick, so this is not a good sign. It broke the high, it broke the low just by wick. Just wait for one more candle. There's a high chance it will go inside the range. If you get this sort of market condition, there's a very high chance it will go inside the range. So here we have our entry. I would like to take an entry somewhere around here. But the thing is that if let's suppose a single candle just hits my entry and closes somewhere around this area, it would be a V-shaped structure. Let's just suppose a single candle just comes down and tags me in and closes at around this area, it would be a V. Now it's respecting this area. So let's just try be a good continue smooth. Okay, this is a bomb slash bullet entry, a perfect bomb slash bullet entry. We have a nice continuation move to the upside. Markets respected this. I did not just blindly place my entry because I know that after this black candle, if second candle comes down and closes somewhere around this area, when I took a lot of losses, I keep switching to a different strategy, but yet GT was the strategy that I came very close to. Don't switch the strategy again and again. I have also done this mistake and lost a lot of time. We are seeing that the market just descend, then the market is ascending. So don't try to take any entry for this sort of market condition. Market was ascending. We got an impulsive candle to the upside. Did not wanted to take this entry because I could see that the market is not very healthy. Continue its move to the upside. Just breaking the high, retracing, breaking the high, retracing. If I get a bomb, I would like to take the entry because we are getting some range. So let's get to take the bomb. This break would be our bomb entry. This area. After this sort of move to the downside, we the market is not looking very trending. Okay, we have small candles like a complete retracement, then barely break the low. Wait, barely break the low again. Break the low, forms a wick trade. So here we are seeing some sort of weakness to the upside, break the high, retrace, then broke the low, retrace, again went up, break the high, retrace. Although it's looking quite nice, we have no weak. Previous price action is little range bound, but this impulse is looking quite aggressive. So if I get an entry somewhere around this area, that would be a good entry. Trade at around this area. It just broken the low. If I get an entry somewhere around this area, I would like to take this because I can see that the market is trying to continue its move. Thing is that the previous price action is not very healthy. Wanted to take a scaling entry, but the previous price action, this was not a very impulsive. Was not looking very healthy, impulsive. Previous candle good. The break was also, we can take a risk. Just because we have already 1% up. See if an entry tag us in. We are almost 7% up. After 10%, I would definitely close this entry. Would not let the market to just go all the way up. After 10%, I usually try to close the entry or try to trail the entry. Because usually after this sort of move, we usually get big retracements. And also, the thing is that if you are in a challenge account or if you are in a funding account, so let's suppose you are 10% up. So anyway, you have to place your stop loss somewhere at around this area so that uh, it could not you could not violate the equity based rule. So this is our bomb entry. If let's suppose I take a bomb entry, this would be a bomb entry. Okay. Here I would like to take a bomb. We had a nice impulsive candle. We had some wicks. We had some aggressive pullback also, but we formed some weakness. You can see that 3, 4, 5 hours of weakness. Then let's just take the entry and see whether it could continue its move to the down or not. This would be our scaling entry. It is a loss. So here I would be exiting at around 2%. Be exiting at around break even. By GT, it would be a 1% loss exact. Here, I'm writing it as 2.46% only, but I'm following the GT. But in my live market, I would definitely close it at around 10%. Here, as I'm following the GT completely, so I will just writing it at around 2.4, not right at 10%. So here we can see we had a large wick at the bottom. Then after this week, we saw a very aggressive move to the upside. Then we get a black candle, but in this sort of market condition, there's a high chance it can just take your stop loss also. We have this sort of aggressive move, yeah, and we have a weak. We did not get any rain, so it could just easily tag us in and tag us out. So I took this aggressive bomb entry because we had a aggressive candle to the upside. Okay, but still I wanted to take this entry because we had already a running profit which was somewhere at around 10%. Okay, so if you have a running profit of 10%, so you may take a 1% risk in that from that profit. You know, because it was a setup, we had a nice momentum to the downside. So sometimes if luck favors you, you may get profit also. And also it went somewhere at around nearly 3%, then it just went up and take you out. So let's suppose you are in a challenge and you are but the thing is that in a challenge, if you have to make 2%, then you should not take these sort of weak entries. Try to take because I remember one time one of my friend account was 6% up, and from their 6% we could not make a 2%. We were 6% up and we closed the challenge at just some dollars was in profit. We just retake the challenge. It does happen sometimes. So here we can see that the market is not showing any sort of strength to the upside. Okay, just breaking the high, retracing, breaking the high. So I don't want to take any entry at around this area. If I look at the size of this impulse, it is almost similar to the range bound candles, range candles. So I don't want to take any impulse in this market. There is a high chance it will just tag you in and tag you out. If I get a nice impulsive candle to the downside, I would like to take a sell. But I can see that the market is losing its momentum to the upside. If I get a sell, I would like to take a buying. For any buying opportunity, I need a nice confirmation candle. There the market break the lows. We are trying to continue our move to the upside, but we are completely inside the range. Okay, so let's suppose this is our range. Let's think that this is our range. So if we get a break, retest, and then continuation, and then I would like to, then we get even a small impulse, then I would like to take this entry because I know that if it has already broken the range, there is a high chance it will continue its move to the upside. In these sort of market condition, if you will try to take any entry, then that will not be a good. There we can see that the market is trying to continue its move. Right, our entry is somewhere around this area. I don't want to take the. No matter what a strategy you use, you will not be able to catch these sort of moves unless you take your entry somewhere around this area. And these entries will give you a bigger drawdowns. So not good here to take the trade. And now I can see that at the top we are seeing some weakness. We have a large wick at the top. For taking any bomb entry, we can see we have a lots of wicks at the top, lots of wicks at the bottom. We have also wicks at the wick at the bottom. So don't want to take any in this sort of tag you in and tag. Here we have our entry. But the thing is that if just tag us in, there's a high chance it can also tag us out. The market will barely break the low. This is happening because of the war. They're not getting any good opportunity entry. Just barely break the high. Just sometimes what happens when you miss an entry just by reading the price action, you feel like you have done some mistakes, but that's not correct way to think. Just follow your rule, for believe in your strategy. This is not a strategy, I would say. This is just a simple candle by candle. This is not even a strategy. This is the reading of candles. All the candle has broken its high. This is candle has not broken the high, so this is our entry. But the thing is that we had a lots of wick at the top, and if I look at all these candles, it's completely trying to continue its move to the downside. So just wait, beginning right now. Formed a bomb setup. Okay. It has formed the bomb setup, but we don't have any nice impulse. We have three candles, which is clearly showing me the loss of momentum, 3, 4 candles. So I don't want to take any entry in this sort of market condition. It will tell me. So here the market has started its move to the downside. You look at the market. So what the market is doing, formed some sort of channel, broke this channel, and now trying to continue its move side. If I get, and also you can see that the retracement is quite small. Could not even break the low high of this candle. If I get an entry somewhere around this area, I would like to break is also good, not very big, but is I was here every candle is white candle, so it's forming some sort of V structure. So usually after this sort of market condition, we usually get a deeper retracement. To be So you have to trust your analysis. So after this continuation move to the upside, you just give some range, but again, I did not wanted to take the entry. The reason is not that that this is uh, we are sorry we are getting this up candle. The reason is that if you look at the past 2, 3 candles, it's also not showing the continuation of the move. So what would I do? Like, what is the purpose of taking the trade if the trend is not aggressive? What is the purpose of range? There is no purpose of stock market. And here we can see that the market is moving. Sorry. We get a nice break to the down. Let's see if we get an entry somewhere around this area. Yes, so it could not tag me in, and after this sort of white candle, I don't want it to be in the market. If this candle would have tagged me in, then that's okay. But if the market has given me an opportunity not be in that market, I wanted to see my 1%. And here it would have not tagged me in. So let's just remove our entry, because this sort of aggressive move, it can just easily form a V structure. And also if you these white candles, these black candles, so we can see that this is looking impulsive, but if you compare this range, this entire range, so in this entire range we have this sort of like 2 3 similar sort of candles. So it can just tag us in and tag us out. Take trade. The market has given you an opportunity to save 1%. Save your 1%. It just retraced from here, but again, I when I look at the previous market condition, I did not wanted to take that trade. My internet is not okay. See, the thing is, we got a break from this range. This is the thing which I always talk. We got a break. The market went up, retest this resistance come support area, and now it's trying to continue its move to the upside. If I get an entry somewhere around this area, then that would be our high probability. Just then hope the upside. This after this candle, I don't wanted to take the entry. With this sort of indecision candle, I did not wanted to take this sort of. Tag me in and tag me out. It continued its move, but again, thing is that now see, here we have an impulse, but is it looking you that the market is trending to the upside? No, it has some wick at the top. Also, if you compare the size of this impulse, that's not looking very healthy. So I would be, I would have taken this entry, be a loss again, because market was ascending. If you come gauge the momentum of this leg, it was clearly telling you that the market is losing its momentum. If you gauge this, now I know that there is a high chance that the market will continue its range. It barely broke the high, but just check that this was not a. If the impulse would like 2 3 pips, this candle would be a 3 pips bigger candle, then I would definitely take the entry. Risky. So the previously we had some wicks. Yeah. Here we can again see some sort of ascending market condition. One thing I would like to tell you that don't try to always mark the lines. So sometimes what happens, so if you will mark the lines, you are creating some bias. So don't always try to mark the lines. Try to read this ascendingness from just by looking at the candles or just by reading the price action, so that you don't create a bias. If you will create a bias, and let's suppose you get a nice let's suppose this is a range. Let's suppose this is a range, and the market break this range, retest, and now it's giving you a impulse. So as you have already created a bias, you will not be able to you will not be able to see this thing. Okay, but it is important to know that at what price area the market is breaking its resistance or support, or then giving you a retest and then continuation of the trend. If you are new, then try to just read the chart by looking at just the candles, not by the lines. Here, this is the thing which I was telling you, that we had, let's suppose, some range, and the market, let's then the market see what so let's suppose we have this resistance. Okay, you're getting this thing. Now the market is trying to break this resistance and now trying to continue its move to the downside. We have some wicks at the bottom. We have some wick at the bottom, but if it continued its move to the downside, there is a high chance it will continue its move to the downs. And also the thing is that which I'm liking is, like, let's suppose we draw a channel like this. So at the lower end, it formed some sort of resistance. Then it's trying to continue its move to the downside. So usually, if you get this sort of a range at the top resistance or at the bottom at the support, so the chances of continuing that move becomes high. So these are just the probability. There is a chance that it may continue its move to the down. There is a chance that it may not continue. So we have some wicks at that bottom. So tagged us in and tagged us out. That's okay. We had some wick, but all the things were telling me that we should take this entry. Despite we had some wicks, but the market in how the market is in range. Taking any trade be a good idea. If I look at the size of these candles and these candles, it is almost similar. So if you look at these entire candles, so the height is almost similar. Now we can say that we are still in the range, but the height of the candles has increased. So wait for market to we are also approaching bomb entry. It has broken. Let's see whether this is a bomb. We are having a bomb entry. Here we have it break the high, then break the low, continued its move to the downside, and it's forming the bomb. But the thing which I don't like is like how the like coming down, then going up, then again coming down, then it's forming the bomb at around this area. So I don't like this sort of thing. There is a chance that it will can just give us a deeper retracement. If this bomb would be somewhere at around a cleaner, then I would take the bomb if it formed at around a clean ascending break. Here the market is not clean. It is not a good area to take the bomb. It would have definitely tagged me out because the 15 PPSL is very small. It would have definitely tagged me out. Here we can see that the market has started its move to the downside. I see the market. You can see that we had some sort of V structure. After this V structure, we got some range. Now the market is trying to continue its move to the downside. Let's gauge this momentum because we have some wicks at the bottom also. We have some wick, but if I look at the entire market condition, it will become a risky trade, I would say. We have some wicks. The impulse is not that good. Previously, also we have some uh like wick rejection. Let's wait for one more candle. After this candle, I would definitely not take. But previously, it was not showing very healthy trend. This was a nice impulse, but after this sort of impulse is not good. We have some wicks at the bottom, some wicks at the top. Previously, also these sort of candles are not good to take any entry. Previously, also it was. So we have finished our month of June. We had not lots of losses, but we have like 4 losses. But that's okay if you are taking a 4 losses in the span of like 1 month. So that's perfect. And we had also this 10% move. We had this 10% move. I would definitely close this entry somewhere around 10% if I would have taken this entry in the live market. We had one entry at around this area. We could take this entry, but the thing was, but the thing I did not like how we were in the range, ascend, descend, then we get just a single impulse. I did not like this entry. Let's suppose if I would have taken this entry, then it would be a winner, or it would be a winner. But the thing is that it was coming from some sort of ascending market condition. So we have taken entry, three entry, 4, 5 entries. 5 entries, 4 losses, 1 winner. 1 plus 2.46. 2.46 minus, we have minus 1.54%. Let's suppose we would have closed our entry at around 3%. So this here, then, and this was also a break-even trade according to that. So this would be a break-even if I close my entry at around 3%. So one loss, two loss, three loss. So by that method, I would be at around break-even, no profit, no loss. Total trades here, one winner, four losses. Just give me a second. So here we had three losses, three losses, almost two winners. That's three. And let's suppose I would have closed this entry at around 10%. Then this would be somewhere at around one, two, four losses, 6% up. It would be just 6% up. Suppose I would have closed that entry at around 10%. So this is the whole picture. Oops. We have two questions. Sorry, funny. So next time, can you backtest 1:2 RR hard take profit? I don't think 1:2 would be a good idea to do. 1:3, because you know the win rate is not that good of GT. If you are not having a good win rate, then closing your trade at 1:3 will not be a good idea. If you look at, give a quick look at a quick look at the current market scenario.